Alrighty, good morning everybody. It is Tuesday, June 21st, 2022, and let's go ahead and get started. Want to just point out real quickly here that our two major swings, and I'm going to bring up the higher time frame chart really quickly just to point out what swings I'm talking about here. But the two major swings, we have this right here at 37.2350, and then we have this other swing here at 37.3950. Okay, these two spots right here on the chart. If you look at what happened here yesterday and going into the overnight session, we came right up into that first swing here. You can see that little peek through, and then we got a pretty nice pullback before the bulls went ahead and jumped back in. And then here in the overnight session, we came right up and basically did the same thing. Got a little peek right into that next swing and then got a really major pullback from there. And then notice we came down, held the 200 and went ahead, and the bulls are attempting to go ahead and break out again, but we've got a rejection again here. So just wanted to point out, again, these are why we were watching all of these major swings on the higher time frames, because a lot of times what happens is we push right into it and we get some type of rejection or some type of balance if we're coming down from the opposite direction. So just wanted to point that out. Let's go ahead and jump up to our high time frames here. We'll go up to our quarterly chart, and just want to point out we still have, again, that potential bullish divergence forming off of the lows. Again, this could potentially come all the way back to 2100, and we could still have that signal. So not really pinpointing anything, but just important to note that that's what we're seeing right now from a signals perspective. And also keep in mind we did come into the 38 and break through. So next stop would be down into 34.54, or maybe all the way down into 31.35. And then we can't ignore this major swing to the downside coming off this quarterly candle, the high at 33.1750. So I will go ahead and throw that across here so that we can be aware of that as price comes down. Put 1750 in, and this will be our swing high low. So we'll have that there just in case. And then remember, with the market and the global and domestic issues going on right now, we could be going ahead and coming to retrace all the way back to the lows of the COVID correction. And that would be right around 2105. So I wouldn't be surprised if we saw a push all the way back to test that low at some point in the coming months. But again, that's just all speculation. So for now, we just follow whatever the market is doing. So let's go over to our monthly chart, and monthly also does have, like we've been saying for a while now, a potential bullish divergence from the lows. So nice swath of time frames down here indicating that potential signal. And then on our weekly chart as well, we got a nice bullish divergence. So we saw it first back in the week that closed May 20th. There was a bounce out of there, so that bullish signal did follow through for a push from about 3,800 all the way up to about 4,200 for just over a 400 point bounce. And then we got a bearish signal and then the rejection back down lower. And now that we're testing this new low from the previous weekly close, we have another bullish divergence from that low. So another pattern that's forming here that looks like we could get another attempt to break out to the upside. And you guys know what I say about all these bullish attempts. They're for selling because we would expect there to be another swat for a push lower. So even though there are a lot of higher time frame bullish signals from the lows, that doesn't mean we're getting some test of the all-time highs again. Is it possible? That it's a possibility that the bulls could push that all the way back to the all-time high, but I wouldn't expect it. So any type of bounce, I would still be looking for that rejection to then swat back lower. So here we go. 3-month quarterly chart, monthly chart, and weekly chart, all with a bullish divergence from last week's low. On our daily, same thing, just like a couple weeks back, I said we had the weekly bullish divergence from the low around 3,800. We also saw it there on the daily. Got the follow through, the rejection back down, and notice where the rejection was, right around the, let me just make sure this is drawn correctly, right around the 50% retracement of that leg. So came down, bounced up with a bullish divergence on the daily and the weekly, came up just in front of the 50% retrace there, and went ahead and got the rejection back lower. Now that we're coming down a little bit lower here, not only did we have quarterly, monthly, and weekly bullish divergence, we now have a bullish daily divergence as well from yesterday's low. Remember, yesterday was basically a half day trading session, so yesterday or Friday we have the same signal, a bullish divergence from that low. And you can see yesterday and coming into the open this morning, we have gotten a push higher. Now, it hasn't been an appreciable push, but so far they are pushing the market right now. Now, let's get into levels for this morning. So, the current leg down from this high up here at 42.0475 down to the low we made yesterday. On Friday, down here at 36.39. We have 3 major retracement levels you can see marked on the chart. We've got the 38, the 50, and the 61 on there. So just be aware of those larger fibs, and that would be 38.53, 39. Actually, let's see if I can actually capture that level there. Okay, so 39.22, and then the 61.8 is up here at 39.8850. Okay, and then I have also got that major swing. Remember, this was the level we were watching back on the previous contract, as we were bouncing up and down for like a week and a half there. We were watching this low here, but I believe it was 40.70, 450 or something. But we've got that there at 74 on the new contract. So that's also really important to pay attention to. And then just note that this other major swing we have down here around 39.16 happens to line up with that 50% retracement area. Okay, so those are the bigger time frame levels we want to be aware of. And let's go ahead and jump down to the 60-minute so we can talk about the one last fib retracement leg that I want to talk about, and that is not this major push from 42.0475 down to the low of Friday of last week, but this smaller leg here. Remember, we got that bounce out and attempt by the bulls to push higher, and it didn't get very far. And when we got to this high right around 38.43, the market then failed and came back lower to make this essentially double bottom at the end of last week. So that leg down from, again, this high around 38.43 down to the low we made last week at 36.39 gives us these other 3 retracement levels here. So here's the leg down. The 38 was sitting right here and we already pushed through it. We had the 50 right here. We've already pushed through that. And notice again that major swing that I talked about just a few minutes ago, and that 50% retracement is this little pocket here from about 37.39 to 37.42, and that was exactly where we got that rejection in the overnight session here. So came right into that area, pulled back appreciably here, and then bounced back up to basically peak right on through the 50% retracement. And now we're pulling back once again. So those two are already basically played out. So just be aware the 61.8 of this smaller leg from last week is right up here at 37.66 So those are kind of the higher time frame levels I wanted to mention. We've already talked about the two swings that we tested at the end of yesterday and then in the overnight session here. And then I believe we've got that larger time frame swing. If you zoom out and look back here, this swing right here lines up beautifully, and I'm going to zoom back in here, beautifully right inside of this area around 38.07 and 38.12, the two minor eye levels. So a nice little pocket there. If they do end up pushing through the 61.8 retracement, the major eye level at 37.70 half and 37.82, we've got that pocket there around 07 to 12. Any further than that to the upside, again, there's a possibility we do get some type of bullish follow through based off of all the stuff we saw down here from Friday's low. And we do have a nice 60-minute bullish signal from this low that we made just about a half hour ago. If they do follow through and they get up through that pocket up here, we've got the major eye level at 38.22. And then from there, let me see if I can do this a little bit smoother here. We have, again, that retracement of the larger leg up there right around 38.55. And we have our minor eye level at 38.53. So that would be another area I wouldn't be surprised to see there be some contention for the bulls as they push. And then we're going to be getting up into that gap we made last week. So if you remember back to, was it last week or maybe, let's see, we had Friday, Thursday, Wednesday, Tuesday, Monday. So it was the gap going into Monday of last week. So we've got basically 38.79 up into 38.97 there. Won't be surprising to see that get filled at some point, so be aware as the market pushes higher. We've got the minor eye level 38.75 lining up with another major swing. If we zoom all the way back to this area back here, that really hasn't been tested. So that little 38.75, 38.74.50 area, and then we have the beginning of the gap at 38.78.50 there. A little bit further up, if we do fill the gap up to 38.96, we have our major eye level at 39.16.50, and then the major swing, the major retracement level up there at 39.22 that we talked about a couple minutes ago. And then from there, we still have this pocket here, the same levels from the previous contract on the new one here, 40, 45, and 50. And then we're up into that next major eye level at 39.84, which is essentially right in conjunction with the 61.8 retracement there at 39.88. So those are the areas up above. Don't really expect us to be having some type of major break through that. But if it does, we'll have all of our other major eye levels up there in this pocket here, right around 40.81, where we have another major swing and a major eye level here. So 40.74 to 40.81. On the other side of things here, if the bulls end up getting rejected here, or they do end up pushing a little bit further and then get a rejection up top, and the market sells off below the previous weekly low down here at 36.39, we have some major and minor eye levels down below us to watch. We have 36.33, 36.25, 36.12.50, 35.87, 35.34, 35.25, 34.89.50, and 34.65. Any further from there brings us all the way down to 34.07, 33.86, and 33.63. That's going to be another basically 400 points lower So until we get down there, I'm not going to mention anything else. And then finally, the last little area of the chart that we haven't talked about is the leg from Friday's low at 36.39 up to our overnight high that we made here at 37.49. So in order to look at that, I want to jump down to the 10-minute chart, and then we're just going to be about ready for the open. Now keep in mind, 7 a.m. we do have a little news announcement. We have existing home sales, so just be aware that right at 7 a.m. there could be a little bit of volatility, a little bit of jump in your dome, so you want to be aware of that. So let's go to our 10-minute chart and talk about basically all the garbage from from yesterday and from the end of last week. You can see that there's a whole lot of chop and messiness down basically between the low of yesterday and the high of yesterday. A whole bunch of crap. So let's talk about the levels inside of there. I went ahead and looked at the whole fib from Friday's low at 37.39 to our overnight high. And then I looked at the fib leg of yesterday's low, remember our half day, at 36.61 half up to the overnight high. And you can see that the fib legs line up almost perfectly. So we've got the 38 and the 50 lining up right here, again very close together, and we've got the 61.8 and the 50% lining up basically right here at 50% of yesterday. So really nice confluence of those two fib legs. And then the 38 of the smaller leg happens to be basically the close of yesterday. So everything lines up really nicely. And then the 61.8 of the whole push from the low of last week, basically the low of the year, up to the high of our overnight session, the 61.8 ends up being exactly 36.81, our major eye level. So everything's lining up really nicely. I went ahead and shaded this little area here from 50% of yesterday up into the two fib confluence levels. And then the 38 and the 50% confluence area is just kind of right in the middle of all the mess, but I will go ahead and highlight these two areas as well. So give me 1 second. And we're just going to have that highlighted just so that we're aware if the price breaks through the minor eye level at 37.09, we could potentially see something go on right there. And let me get the actual number. It is 05 quarter to 07. So not really a big swath, but 05 quarter to 07 here. Okay, and like I said, the close of yesterday is basically the 38% of the smaller leg. So I'm going to get rid of the fibs now. And now we just have everything that we want to be aware of. Okay, we've got the high of yesterday in red. We've got this fib leg is no longer, in my opinion, relevant, so we're going to get rid of it. We've got the close of yesterday. We've got the minor eye level at 37.09. We have that pocket where the two fibs lining up here between 37.05 half and 37.07. We've got 50% of yesterday up into the other fib at 36.94. Again, another little 1 to 2 point zone there. And then we have 36.90, 36.81, and then the low of yesterday right around 36.61.50 to 36.62. And then we're back down to 36.33, 36.25, and 36.12.50. And those are all those levels we talked about below last week's price action. So market is literally about to open here in about 10 seconds. So for those watching on YouTube, have a great morning.